live trades for Wednesday, November 23rd, last trading day of the week. We are not trading on Thursday and Friday. For Thanksgiving holiday, our live trades did better than the hypotheticals because we stopped early intraday. I sent out a message. Not everyone can make adjustments. We do have our stock index portfolio available for managed account trading. So in the 200K, if you want it traded for you, or if you want to trade it on your own, you can trade it on your own. I made intraday adjustments last Friday, phasing in and underperformed what we were doing as we went into the day. And then today we outperformed. It's difficult to make those adjustments intraday, but I'll tell you why I did that in a minute. But if you traded it today, you're in sync with the portfolio yesterday. We were at equity peaks with what we were trading. The combination of going back and forth with these two portfolios we were at equity peaks, and so today we continue to be at equity peaks because we made that adjustment, and hypotheticals are still up on the week. So if you did make that adjustment, yesterday was a big day. So Monday and Wednesday were down, but yesterday was a big day, and you're up on the week as we go into Thanksgiving. The live trades did a little better because we did make that adjustment, and there was a big swing. We had FOMC minutes today, not FOMC. Oftentimes the big event is FOMC, where the FOMC chair, Jay Powell, will come out and have a press conference afterwards, release the policy statements. And then they do that every 6 weeks or so. And then between meetings, they release the minutes from the previous meetings. And I was able to pull the data and take a look at this. And I didn't realize how poorly our portfolios were doing this year. And so that's why I made that decision to get out intraday. We were up, and the first FOMC minutes released on January the 5th, the portfolios did well, plus 18,420. Since then, it had 6 losers coming in today, and today was the 7th loser. The sum of those losses are minus 53,000. And we have in our portfolio calculator a way to test whether you should trade on FOMC policy statements. We don't have the minutes in there. The market hadn't typically paid much attention to FOMC minutes. In 2021, it was minus 7,400. In 2020, it was plus 24,000 on FOMC minutes, but it's paying more attention to the minutes now. Kind of like CPI data, the market typically didn't pay attention to CPI because inflation stayed the same for a long time, and now we're kind of at a point where the market is fighting the Fed. The market wants to go in one direction while the Fed is going in another direction, and so there's more volatility on FOMC minutes than there has been in the past. And I saw that today. I got out and sent the message, and so that's why there's a difference between live and hypotheticals. Once again, this is our stock index portfolio. We can trade it for you, or you can lease the strategies and trade it on your side. And let's go over the market and the trading system signals on the day. So the VIX dropped even further. Just a massive plummet in the VIX down to 20.35, almost into the 19 range. And the market just had these spike downs, just strange spike downs. It had an orderly rally, and yesterday was an orderly rally, and then an orderly rally here. We got out around here, and then the market sold off, and FOMC, lots of volatility. It made its way back up. In general, with all the VIX divergences we've had, to me, this is kind of weak. I would have thought there would have been a stronger rally as we go into Thanksgiving, and typically this time of year, after all the market's been through, after all the liquidity and the seasonality, I would have thought that the market would have made a stronger move higher. A little surprised that it didn't go higher today, and so the ticks were orderly, and then they started getting more choppy. Advanced decline line was just up 700 a day, and so I've been anticipating maybe a strong rally to the end of the year, whether the market deserves it or not. It just seems to be what happens in these situations. But the weakness in this rally right here leads me to be more open to the potential for the market to roll over into the end of the year. It's unclear what will happen. Surprising how weak this rally was yesterday and today. And so let's go over the trades on the day. The trade of the day obviously was a zigzag. It did well on a day like today. 4 for 5 plus 3,075 on 2 E-minis. And so it did well on the E-minis. The VTNQ, which was profitable yesterday, lost today, minus 27.40 for 2 E-minis. EVP1 was on a winning trade, got out on a trailing stop, and then lost, minus 12.40 on 2 E-minis. Gap continuation, lost here, minus 2,025 per E-mini, 4,050 on 2 E-minis. Momentum reversal looked like it might capture a short move today, but the market, the seasonality's kicked in just weak overall, minus 770 on 2 E-minis. And adaptive moving average was the only ES in the BLITZ package that traded today, plus 1550 on 2 E-minis. Let's look at the NASDAQ trades. 0 for 4 on the stock index portfolio 18 for NASDAQ trades. Viper, 2 losses. Robot always finds a way to lose. I thought this would be a runner. And I don't think it's had a winning trade since we started this, but it has a small stop loss, tight stop loss. So looking to catch a runner. I thought we would catch it today and then maybe transition out. Cobra 3. Stopped out on the day, minus 11.30 on 2 E-minis. Tick reversal down on the day, minus, what's that number there? Minus 29.90 on 2 E-minis. And so look at the ES trades on the day. Tick count trend took a lot of losses today, minus 23.25 on 2 E-minis. And then tick fader was profitable, plus 375 per E-mini or 750 on 2. And then minus 625 or minus 1250 on 2 E-minis on the Cobra 3 E-mini S&P. And so those are the trades on the day. Once again, up on the week, puts you in a better place to go into the BLITZ again if you didn't trade today, or if you were able to get out early. Here is the portfolio coming into today. This is the stock index portfolio 18. It was at equity peak yesterday, and then the combination of strategies that we were trading, the 10 additional strategies with the BLITZ, was still in a drawdown. So we've alternated in and out. And so if you take up the piece together what we've traded, we are at equity peaks. We were at equity peaks yesterday on a hypothetical basis, at equity peaks on live trading as well. And so today was a down day. So this is in about a $29,000 or $30,000 out of $40,000 drawdown. So coming back in on Monday, the risk worst case drawdown in the BLITZ package is about $10,000, so it's a good place to start once again. And so those are the trades on the day for Wednesday, November 23rd, 2022. As we roll into Thanksgiving, have a happy Thanksgiving, and we will be back, I guess, on these live trading reports on Monday.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.